Hello everyone, how are we doing today? Good afternoon. Hope we're all doing well. So if I could get a quick audio and visual check, make sure you guys can see the ES daily chart and hear my voice okay. 5, all good? Awesome. All right, thank you guys. Satish, good afternoon. Joe, hello. Ahmed, hello. Dylan, huge range today? Absolutely. Just like we were looking at from Sunday. Small range Monday, large range with high impact news driver. So textbook, classic delivery, exactly what we would expect. Denisha, hope everyone's doing good today. I hope you're doing good as well. Wasim, greetings. Adolfo, hello. Christopher, Michael, hello. Thank you, Denisha. Thank you, Christopher. AB, thank you. Silk, thank you. Colin, good afternoon. Curtis, hello, sir. Glad everything's good. Christopher, love to hear your take on the current price action. That's what we're going to do, Christopher. Go ahead and get this price action sorted out for sure. Anita, hello. Glad to have you. Alex, what's going on, brother? Glad to have you. Olawale, doing good, brother. Doing good, man. Hope you're good as well. Grecos, I'm doing good, my man. Doing good. Hope you're doing lovely. All right. Jay, did you trade today? No, sir, I did not. I took one trade. I tried to short the lunch retracement. I took a small stop with reduced risk, but after the CPI report, market exploded to the targets, and because it was in too much of a premium, again, my rules don't allow me to chase price after market already delivers to objectives. So it was a relaxed morning, watching price action. Nice to see it hit our targets and deliver textbook. And again, we'll sort all that stuff out and do some trading here in the PM session. Srinith, amazing call on that NAS breaker. Appreciate it. Yeah, man, it delivered to script. Everything we were looking for, bang, bang. Greetings from Argentina. Awesome. Glad to have you, Manuel. Amy Moore, hello. All right, guys. So let's go ahead and sort this out. We're at 1:30 here, getting into the PM session, and then we'll see what it is we have in front of us. So go ahead and make sure I got the broker open. So we'll be doing some trading today. But again, I do need to get through the disclaimer before we get into the business here. So read the disclaimer before going any further in the description. Again, none of this is financial advice. I am not a financial advisor. This is solely education and my opinion. Everything you do, you have to take responsibility for, not some person 1,000 miles away on the internet. So let's all be responsible for our own decisions. No over leveraging. And again, I'm not putting anybody in the trades. It's simply what I'm doing with my demo account, quote unquote demo. And yep, that's that. So with the disclaimer out of the way, I think I hit all the points there. But we'll go ahead and get into the business. Joe, the script is pre-written? Absolutely. So let's go ahead and sort out some price action. Again, as always, we need to start with the daily chart. So again, we've been looking at the bullish structure all week. Nothing's been bearish on this market. We've obviously been looking for higher prices. I took our attention to this inefficiency here, and then this small inefficiency here. So we did get quite a few targets hit for E-mini S&P. Looking at NQ, just beautiful delivery. Remember, I called this break route to you guys on Sunday. Said that if we're going to trade to this high and this high here, which was my targets, I said we'd use this fair value gap as what? Inversion. So what did we do Monday? Trade lower into a short-term discount, use support at the levels we're looking for. And again, I'm not a time traveler. I'm not an inside trader. It's just algorithmic theory. Very simple, very straightforward. We use this as support exactly as we were expecting. And then again, we don't care about the news, the data. I don't even know what the CPI print was. All I know is this market's algorithmically going to attack these highs. And that's all I care about. I don't care about what the news was, what the inflation report is. It's all nonsense, and it's all fake in my opinion anyway. So we cut through the noise and we get right down to business, as I said. So equal highs there, using the inversion, fair value gap here support that we had on our charts before this candle even started printing. And then beautiful run higher right into the targets we were looking for. And again, never gets old. So now that we see the daily chart, we've had several objectives traded to. These equal highs here. Again, I covered to you guys also the look back, how that's within 40 days and 60 days. So there's a lot of open float and recent liquidity above those levels. that the market's going to want to reprice into. And again, we nailed that one to the wall. But again, for those of you guys that have been here, that's just business as usual for us. Not a time traveler, just the algo bot. Yep, exactly, Anita. You know it. So equal highs taken out. And again, just want to have that higher time frame perspective. So we have had targets hit. So that puts me in a bit of a more reserved position. I'm not looking to push it a lot this afternoon. Again, for me, it's just going to be a scalper's market. Why? Because we've already hit several objectives. If we look at the weekly chart, I took our attention to this buy side last week and then took our attention to this buy side this week. And again, it delivers like gangbusters. So looking at the fact that we delivered these levels, again, that puts me in a more relaxed position as a trader where I'm not going to look to force it. If there's a setup, we'll take it. But given that we've already seen a large range expansion, we already hit the targets we were looking for, then that's going to, again, pump the brakes on wanting to be overly aggressive. But again, if there's opportunities, we'll take it down. Daily chart here for ES. Again, we touched on this bullish breaker here, how that would be used as support. Look at how we hit that bullish order block I took our attention to, off to the races. Again, nothing's random, and you're talking to someone who knows the algorithm like the back of their hand. So repricing into this small inefficiency that I took our attention to, and then these two up close candles, bearish order block. So that was one of the targets we had, and again, smashes into that handsomely. So let's drop down into the 4 hour. And we'll refine this a bit further. So I took our attention to these equal highs here on that 4 hour chart. I said that was too clean for my liking, and that the algorithm is going to want to smash up into that and make those smooth lines jagged. So we get that nice repricing into that. And then we still have these equal highs here that may be a potential draw going into this week. But again, we did reprice higher into these levels. From what specific level did I tell you guys? Remember, I taught you guys that this bullish order block on the daily chart is a breaker in a lower time frame. And again, I gave you guys some sauce there that all the higher time frame order blocks are lower time frame breakers. So I told you guys we're going to make the low of the week where? Inside the bullish breaker. Did we? Yes. Off to the races. To the targets I'm giving you. So again, textbook delivery with everything we were looking for, top down. So given that we've repriced above these equal highs here, we're still seeing bullish structure and order flow on the higher time frames top down. So yes, we can take shorts, but we have to be very nimble and surgical, understanding that that higher time frame order flow is going to be parent to anything we see in the lower time frames. So above these highs here, we have this inefficiency, this entire down move here, that sell side delivery only. The market will want to reprice into that, assuming we continue higher. And then if we get animated through that, and then we have these equal highs here on the 4 hour chart, which the E-mini NASDAQ has already repriced above. So we've already repriced there in NASDAQ. Again, that inversion fair value gap I took our attention to. Use it as support, off to the races. Again, not classical support and resistance. Okay, this is an old high. We're going to hit that and buy that. You have to understand narrative. This is how retail traders, they expect their support and resistance to work like this. It's a high, it hits it, and it rallies. That's what they expect it to work like, but it never does for them. Why? Because they're missing all these other elements in their analysis. Higher time frame. What's it reaching for? Why should it go there? And then once you understand that, even the retail bullshit will work, but you have to have a narrative as to what the market's going to do. So again, equal highs there, repriced beautifully. So let's drop down to the hourly and refine this further. So consolidation ahead of the news driver, which is what we expect. So accumulation, manipulation, equal lows in here, taking those traders out or tripping them in short. And then again, rakes them across the coals, trading right into the targets that we were looking for, being that daily inefficiency. So going back up to that daily chart, do not lose sight of what these levels are on the daily chart. Don't get lost in the time frames. It's important to have all those levels in mind. So again, seeing that bullish structure, seeing the bullish order flow, everything is pointing to higher prices. So again, we get that delivery in there. So let's go over to the NQ, breeze right through this, and we'll get down to lower time frames and again, get to work here. So we traded into this inefficiency here. We see the bodies respecting that. Again, still seeing that bullish structure on NASDAQ as well, but it has already met these objectives we were looking for. So what I'm going to want to see is how we trade there. Do we continue aggressively expanding, or do we get a rejection above these highs and see some type of retracement back into the range. That's what I'm weighing out. That's what I'm considering right now for my trading. So we'll go through the time frames here. Last thing I want to touch on is the dollar. And again, dollar repricing to the key levels handsomely. So to start the week, with what I was given, with what I could see at the time, with the limited visibility before Sunday's open, we were above this. So I said, gun to my head, price is likely going higher because the bullishness we were seeing by closing above this. But remember what I told you guys as an invalidation. If we get below this gray box, getting below that, more specifically on the 4-hour chart, looking at this down close here. I said if we get below that, we're going for what? The sell side here, and then these equal lows over here. And then the market just careens lower into all those levels. So again, I never call both sides of the market. I give my opinion. I gladly welcome being incorrect, and we just get in line with what the market's showing us. We're not forcing, and we don't have to be right every time. Again, the goal isn't to be right. The goal is to make money. So again, we see that expansion lower into all those targets nicely. So what I'm going to want to see on the downside would be this inefficiency here. And that's what has my attention for dollar in the short term. So I want to see how we trade below these lows. Do we continue accelerating, or do we find some support and reject these lows to the upside? That's what I'm weighing out and considering right now. So that's all I had to share for dollar. So let's go ahead and go back to the indices. And then we'll just stay locked into ES. All right, so what I'm monitoring for E-mini S&P right now, looking at, again, considering the bullishness, we opened with a gap higher. But again, you guys saw the content I shared yesterday, but the gap filled. Why didn't it do it today? It's not just always there's a gap, it's going to fill it. There has to be a narrative. There has to be a context. What was the narrative on Monday? It's going to be a small range day. So the market's going to do what? It's going to seek fair value. So it's going to just go to inefficiencies and stay within a tight range. Today, we're expecting what? An expansion, higher. So it's going to gap up and it's going to keep running to those levels. And then it may fill it in at a later time. It may not. So you have to understand what narrative and what profile you're trading in. And again, that's just something that's a result of working with somebody who knows what they're doing, being taught it, and again, just a matter of experience as well. So we have this large gap in here. You want to have that on your chart. That's something that is noteworthy. And what I'm monitoring, because we've already hit these key levels, we have a daily fair value gap, and we have this 15-minute fair value gap. If we remain below that and we're unable to get above it, I will look for lower prices for this PM session. If we get above this 15-minute fair value gap here, use it as support, then I'll be looking for higher prices into, again, the inefficiency over here, just with that downside delivery that I took our attention to. So those are the two scenarios that I'm looking at for the PM session and what I'm weighing out. So because it's not clear, it's not one-sided right now, I have to do what we all have to do at times as traders, which is wait for more information. So I'm going to want to see how we trade at these levels. If we remain below it, right now it's showing weakness. I would favor a run below this low and into these inefficiencies there. So let's work our way through the time frames. So again, expansion higher, lunch, retracement lower. And then now we have equal lows here and here. So that would be a plausible draw if we get a rejection from these levels up here. So what I'm going to want to monitor now is this fair value gap in here. If we get below that on a closing basis, then that would tell me that this market is likely going to want to run for these lows in here. And that's how I'd look to position myself. Let me go ahead and... So I think there's a few member questions that I'm seeing right here. So I'll get to those after we wrap up the session. When I'm doing my trading, when I'm doing my analysis, I'm locked in. There's so many things to consider and look at. I wish I could get to all your questions live, but we'll have to do that when I wrap up the trading here, and I'll take care of the member questions for you guys. 1 second. I'm just getting my layouts loaded up. All right, then we'll go ahead and put a line on the start of the PM session here. So 1:30 starts the PM session macro. So the algorithm starts seeking liquidity right at that 1:30 hour. So we trade higher, we run the buy stops, trade into a short-term premium, a daily fair value gap, and then we reject that. So what I'm seeing here is that we're seeing bearish order flow. We traded higher above this high. We broke down through it and rejected it. So now we have this inefficiency, traded up into it. Market broke down, and now we have a mitigation block and fair value gap in here. So what I'm going to be looking at is a likely run. Again, not a trade idea or anything I'm interested in taking just yet, but I would like to see a run below these lows and then potentially these lows here. And then as we covered, so we highlighted on the 5-minute chart, we have these equal lows down here that the market may want to run for. So I will be interested in taking shorts for this PM session. So if I do take a trade, it will be seen on TradingView. You guys will see it here on my screen. But again, none of it is financial advice. You do have to be responsible for your own decisions. I'm a professional trader. I can take 6 losses in a row and still be unfazed and come back like I never left. So again, just giving you guys my point of view, my confidence, because at the end of the day, I'm following a protocol and a plan. And I don't judge my days, my trading days based off did I make money or did I lose money? Did I follow the rules? Did I follow the protocols? If I did, it's a good trading day. If I didn't, it's not a good trading day. The short-term outcome is irrelevant because I'm looking a year into the future. I'm looking at the next 100 trades. So I don't care about what this next session goes, if I get stopped out, if I take a winner, it's unemotional for me. I don't care because I'm looking at a long-term perspective, and all professional money managers have that mindset. They're not getting all hopped up on one trade. So again, with all that out of the way, just to get your guys' mindset in the right place, you shouldn't be freaking out about a stop out. If you are, you have no idea what you're doing and you need to hit the drawing board. So with all that disclaimer out of the way, we'll go ahead and get into the business here. So looking at this 5-minute fair value gap in here, we want to extend that through and then look at the bodies respecting that, and then we trade back down through it. So still waiting for more information. Again, not in a hurry to push the button on a day like today. Man, 153, we're filling it up today. Appreciate you guys joining us. So you guys know I typically like to trade the silver bullet windows, which is that 2 to 3, also 3 to 4. So there's 2 silver bullets for the PM session. But I will take a trade as early as 150 because we start a macro then. And also I've typically likely already seen the manipulation of the PM session run on stops. So what I'm going to want to see now is how we trade inside this inefficiency here. So I'm still getting a gauge for order flow. Again, not antsy about taking a trade, taking it easy. Joe, knowledge is bleeding out, Dylan. For sure, man. And I have to because, I take a trade, I get stopped out. It's nothing for me because, again, I'm a professional. But someone else over leveraged their account because, they're trying to make 10% on one trade, and then it's, Dylan, this is all your fault. So I got to throw the disclaimers out there. So we have an interesting SMT here, the NQ. Swept these lows here while the ES did not. So that's something notable. So what I'm monitoring is how we trade inside this inefficiency. I don't trade with a lot of lipstick on my chart, but I will be more conscious of the fact that you guys are watching this and you guys want to see what I have my attention on. It's this inefficiency here. I want to see how we trade there. And then this is just a new week opening gap template I have where I'm monitoring these gaps in here. I like to see how we trade at these key levels. There's certain PD arrays like event horizon, things like that that I glean insight from using these levels here. Just another tool. Again, nothing you absolutely need to find your consistency, but as you guys know, we have a lot of weapons in our arsenal at my disposal to use when necessary. So let me go and take this off. So I wanted to highlight that SMT there. I do have NASDAQ on another screen, so I'm constantly monitoring all the indices. Except Dow. I don't care about Dow too much. I'll refer to it periodically, but it's not something that I'm terribly interested in. Universe, can you break down the PM model? That is a great question. I get asked all the time about trading the PM session. So here, I'm going to give you guys the secret. Liquidity and inefficiency. So the morning session is the same thing in the afternoon session. The market's doing what? It's running the liquidity. If we're bullish, it takes out sell side. What's it probably going to do? Run to buy side. If we're in the afternoon session and we're bullish, it takes out sell side. What's it going to do? Probably run to buy side. Again, nothing changes. The algorithm's not doing something totally different in the PM, in the AM, or in London. There's just different characteristics with regards to the timing. But if you just hang out, if you just spend time, you'll learn it. I already covered that at 1:30. What's occurring? There's a macro that's doing what? Running on stops. Just like at 9:30, we expect what? A run to liquidity. Usually in the opposite direction of where the market's going to go. So it's the same thing. There's no like different models for different times. It's the same price action. It's doing the same exact things. There's just different subtle nuances to timing. But at the end of the day, the market's doing the same thing. It's running to liquidity, inefficiency with regard to time. So very simple, very straightforward. All the models are the same. Tanya, how are you flipping between the new week opening gap template? Do you save them as a template? Yes, I do. I have TradingView, the Pro plan. Again, I don't get any kickbacks for that. They just offer a really good service. And I really like TradingView and their service and what they offer. So I use the Pro plan and it gives me different templates. So I have like a new week opening gap template and I have regular trading hours. So I have templates to see everything that I want to be abreast to. So, all right, with that, I'm going to go ahead and lock back into the charts. Not as many questions, but again, I'll get to that after. So we traded into this inefficiency here. I said I wanted to see how we trade there. We hit this fair value gap, mitigation block, and then we saw a rejection lower. Thank you. So what I would be interested in seeing is if we get acceleration through these lows in here, my attention would go to these equal lows here and here. So I'll go ahead and mark out that sell side. So if I get the opportunity, I was hoping on a 30-second chart, it would tag that fair value gap. If it does, I'll be looking to sell short there with a stop above here. But again, we don't chase price. If the market runs off, the market runs off. There's nothing we can do about that. So I'm going to have my limit there and then going to have a stop right here. And I'm hoping we can get that limit order tagged for a run below these lows here. So that's what I'm looking for. So again, you have to be patient. You can't chase the market down. You have to wait for it to trade to the levels you want to do business at. And that's what I'm doing. I'm demanding in the market. If it's not trading and doing business at the levels I want to do it, I'll let it go. There's more opportunities tomorrow. There's more opportunities in the next hour. And there's never any reason to have to force any type of setup. All right, so it's touching the limit order, tagged it, and then the difference between the bid and the ask did not fill me. Oh, that's unfortunate. Tags the limit order. The difference between the bid and the ask does not fill us. Screams off in the opposite direction. Part of trading. So we'll see what it gives us here. We got the 2 o'clock hour approaching us. So if it runs to my levels, it doesn't fill me. That's part of trading. Happy with the analysis. It was spot on. Just didn't get the fill. And again, that's part of trading. That's part of trading. Early on in my career, I probably would have thrown one of my monitors across the room by now. But no, all jokes aside, again, it's just part of the business. So had my limit order there, tagged it, hit it perfectly, and then now it's running for the levels we're looking for. So what I would be trading there with those 2 contracts, I'd take a partial at 5, and then I'd let another one run for 10. Mason Sellers, market owes us nothing. Beautiful analysis, brother. Yes, sir. That's absolutely right. So because the fair value gap's an evolving model, I can go ahead and take a short down in here. Modify the order, and then place a stop right here. So about a 3 handle stop. So that's what I'd be looking for. But it'd have to come here. I'm not going to chase the market lower. I'm not going to just get in at market and it's 2 handles away. But looking at from where we got the entry, or where we would have got the theoretical entry, 5 handles right there. Boom. So the trader should be paid right there. Part of trading. HS, your calmness is the biggest lesson here, for sure. Took a long time to get to this point. I figured you guys would be pretty stoked to see the live executions, not just me doing it on my own accounts and then just talking over the price action. So now that I got the appropriate legal disclaimers and all that from my legal team, we're ready to rock and roll. So so it probably won't come up into this one. Again, this is a breakaway. This is going to be that measuring gap. So I really wouldn't even want to see this one fill in. So from here to here, where I think we're going, that's the inefficiency right in the middle. So we wouldn't even want to see that filled in. So if it tags me in at my limit order, great. If not, then no concern. It's just a mistrade, and we take the next opportunity. Lil, did you trade today? I'm trading right now. I'm trading right now. Can you not see the screen? So again, we may just get that reaction from this fair value gap here, but if I were to enter there, it doesn't even offer 5 handles to the target or the terminus. So this entry is not with my rules. So I don't take entries that aren't in alignment with my rules. If I miss a trade, I miss a trade. Many of you guys would probably be freaking out. I know I would have been a while back, but again, you have to have rules. You have to be professional about it, or if not, again, the market will, swiftly kick your ass out the door. So again, expecting this one to be left open. If it tagged it, I would have liked to get that institution order flow entry drill right there, but market did not give it. So Ahmed, 20 points bagged on NQ. Cheers, Dylan. Awesome. Awesome. But yeah, if I had gotten in at the original entry, again, trader would absolutely be paid here. 5 handles on one contract. Stop would be here at about break even. And then I'd be letting the following contract run. So that's how I'd be trading it myself. NQ's already attacking the lows. Yeah, so NQ just smoked the lows we were looking for. Right there. Bam. So again, 130. What's the market going to do? It's going to run higher. Run stops. That's a Judas thing. That's a manipulation. That's to get retail traders that are just reacting to price, get them long. So anyone that had a stop here, chase this move higher, they're in the crosshairs right now. So Christopher, either way, this is a W. Yeah, man. Like I said, I don't judge my days based off the money I made. I'm looking at the protocol. Was the protocol followed? If yes, it was a good day. If not, then it was not a good day. No matter how much I made, no matter how much I lost, if I don't follow the rules, it's a shitty day. So again, 15-minute. We looked at this 15-minute fair value gap here. We trade up into it. We were unable to get above it. So what does that tell me when we then break down? We hit this fair value gap, we break down. That's why I'm looking to get my entry in here, because we had all the confirmation that we needed. So again, if your mentor, the person that is calling the market for you, the person you're paying for signals, the person you're paying to teach you, if they're not out here doing this in front of you, then obviously they're not worth their grain and salt. So again, you don't see me concerned, anxious when I'm in front of the marketplace, because this is the business I do every single day. Every single day we're doing the same thing. So nothing changes. And I have no fear doing it on YouTube in front of how many? 100, 185 you guys? Awesome. Wow. Filling it up. Filling it up. So we have this 5-minute fair value gap in here. If we trade up to there, that offers, that offer a nice run. So we'll see. Just being patient. Again, if the market runs off without me, then it'll run. Dylan, I was down 2%. I backtested ICT Sun's model, and I used your bias as extra confluenced. I'm making my first payout after being down 2%. Wow, man. Congratulations. I know that's an amazing feeling. That's great. Boom. Lows smoked. All right, so let me take that limit order off. Market ran without me, is what it is. Again, there's more opportunities every day. So if I miss a move, I tell myself my next trade is scheduled tomorrow. The next setup is going to be scheduled again another day. So I don't have to be concerned with missing moves. And again, I'm not going to chase it in a discount because, again, my rules don't let me sell discounts. I can only sell premium. Again, qualified all this to you guys real time. The Judas swing, the breakdown. I said we should reject this fair value gap mitigation block. I look to get my entry here inside that breaker. Being a little too demanding, I should have taken that breaker low. But because I like getting those precise entries with very little drawdown, I opted for this entry here. Didn't get it. That's the cost of precision. It's the cost of precision. So hit that level. Told you guys we'd want to see that left open real time before we even hit this level. I said this is going to stay open. Why? It's a measuring. So we don't even want to see this inefficiency traded into. And then boom, runs to low levels. Who else is doing it like that live right in front of you on YouTube? Other than obviously the man himself, ICT. Jay Rich, that's a good question. Why didn't I trade this fair value gap? Because I wanted more confirmation. I wanted to see, because we've already reached levels, because I'm bullish on the higher time frame, when I'm shorting, I want to be extra cautious with those entries. So this would have been a nice fair value gap to short in hindsight, but this one was the confirmation entry I wanted after we broke down. Because looking at this 5-minute chart here, we'll just pull it up on the big screen. I wanted to see this inefficiency here, this buy side imbalance, sell side inefficiency. I wanted to see it disrespected. So as soon as we closed below it here, that's a green light. That's all I need to sell short. So then that's where I was looking to get short in here. And then the market ran right to the objectives. I know a lot of you guys did get your fill. Unfortunately, I didn't. But it's ran 5 handles, and then 10 handles would be the next take profit right here at this sell side here. So I'll keep managing the position with you guys as if I was trading it. So we have this next sell side liquidity pool here. So that's where we're looking for the market to go to. Abraham, Tommy, you guys get in that? Let me know. At least hopefully one of you guys got them on the company accounts. Let me know. Let me check my Discord real quick. Hey, Tommy, Abraham, where you guys at? You guys get in that trade or what? Limit didn't get filled. Gotcha, Tommy. Yeah, tough break, tough break. Oh, replied already on the chat. Oh, Tommy. Okay, I see who you are on the chat now. Okay, gotcha, Tommy. I see you, brother. I see you. But it is what it is. At least we're on the right side. Most traders aren't even on the right side. So we have this fair value gap here, bearish order block. We hit that, we sold off. I want to see the market run for this sell side here. So yeah, the last week of trading here. So hanging out with you guys for a little bit and sorting out some price action. Oh, same here. Yeah, didn't get your entry as well either, Abraham. No, damn. All right, it is what it is. No, no stress, no stress. And then this fair value gap here, it would have paid 5 handles, but again, wasn't in line with my rules. So again, the rules are what keep you in the game. So you gotta stick to the protocol. Cameron, how do you identify measuring gap? Just spend time with me. You'll learn it. I already covered exactly what it is. This recording will be up on YouTube, and if you still don't get it after that, it's just a matter of experience. You'll see it over and over again. You'll study it, and then you'll see how it repeats over and over again. And again, I already covered all the details as to why that was a measuring gap. Christopher, welcome to the Adora community. Appreciate the support, Christopher. Thank you very much. Mason, how many handles would you target if this was NQ? So the equivalent of 5 handles in ES would be 20 in the NASDAQ. So I'll share with you guys what we'd be looking at. So let's say I were to get short here at that level I was looking at for ES. So 20 handles, I would have paid the trader. And then below these lows at 40 handles, I would have paid the trader again. So if I were to enter on 2 contracts, I would have already paid the trader 20 handles. And then below these equal lows here at 40, we would have taken my other partial off, and then I would have banked it. So that's how I would have traded it. But yeah, be sure to hit that like button. I'd really appreciate that. Who else is calling these markets like this on a tight leash for you on YouTube? I know hindsight Harry or market replay reports ain't doing it, right? Yes, sir. Yes, Mason. It would be 20. So yeah, if I was trading the NQ here and I was short, I would have taken profits. I'd be logging it in my journal, shutting off the laptop, and going to live real life. Remember, the goal isn't to be chained to the charts all day. The goal is to have the charts, to have your freedom. So we don't live to trade, we trade to live. High Speed Trading Company, good job. Always love watching you trade. Appreciate that, my man. Thank you. So getting a lot of questions about the measuring gap. So I've already covered that. Ladies and gentlemen. Julian, how do you decide regarding the trade NQ or ES? Experiencing, what signatures I see in the different instruments, how much risk I want to take on. There's a lot of things to consider. But early on, for those of you guys that are still finding profitability, still finding your way, you only need one. You only need one to do really well. ES is enough for a lifetime. So if you're trying to decide, I would say ES. ES, like I said, it's enough for a lifetime. And then once you get more experience, you can start trading the weaker, the stronger, and start doing all types of things like that. Daniel, great analysis, Dylan. Glad to see our analysis are the same damn near every single time. Helps me increase my mental confidence in the stock market. Awesome, Daniel. Joe, we appreciate you, Dylan. Thank you, my man. Carla, great live boss. Thank you. Dre, are you looking for a buy now? Absolutely not. No, just because I'm getting out of shorts doesn't mean it's a buy. That was the trade. That was the trade right there, guys. So if another trade forms, there's another opportunity. Again, I'm gonna take advantage of it. But till then, we have to be patient. I'm still reading things in the order flow, reading things in the market, seeing how far we retrace. I'm considering a lot of things right now. Because we're bullish on that weekly daily chart, I'm taking low-hanging fruit on the downside. If I was trading pro trend with the institutional order flow, I would hold for a lot more. I wouldn't take a partial at 5 and take a partial at 10 right away. I would take down 20, 30, 40, 50 handle trades, and you guys would see those disgusting trades I send into the Telegram where we're capturing the entire daily range. But that's when I'm trading with institutional order flow. I'm not here. I'm trading counter institutional order flow. So I'm entering with low risk, only 2 contracts, very low risk. Normally I'd enter with 4. pyramided up the 6, 7, 8. But I'm not doing that because I'm trading counter trend. So you have to know what direction you're trading with, and that depends. That's going to be dependent on your protocol. You know, how you leverage more when you're trading with that daily chart. Because look at this weekly chart here. The weekly chart is bullish. So if it's bullish, I don't want to be holding shorts. I don't want to overstay my welcome. I want to get in and get out. That's why I'm not shorting in a discount. I get the short up here. If I miss it, it's gone. And if I was trading pro trend, like if I was bearish on the weekly daily chart, then I would be a little more aggressive about getting in. I would have dropped down into like a 15-second chart, and then I would be, you know, this bearish order block, I'd be selling short there. This volume imbalance, I'd be selling short there, and I'd be a lot more aggressive about it. But I'm not trading with the higher time frame institutional order flow. So that changes how I manage things. And then if you want to learn again how to trade like I do, what it is I do, the protocols, and just everything about how I'm managing myself in these markets, I'm going to train you guys how to do that in January that are interested. And again, I'm just out here showing you I got the goods. And this baker never runs out of yeast, baby. Jay Rich, how do you deal with the built up scar tissue from losing streaks back in the day? That's a good question. Following rules. Understanding that as long as I follow the protocol, the max loss I can take in a day, in a week, in a month, it's all predetermined. So as long as I stay within that, there's nothing to fear. There's nothing to be concerned with. That's a good question, Jay. Stefan, will you be trading live now going forward? Great question. This is my last trading week of the year, and then I pick up business in January the following year. I will be doing private trading. I will be opening that up for the last time to the public, and then I'll be going into signals as well. So you guys if you like this, well, I look forward to seeing you guys, and we'll be doing this weekly for signals. And again, buttons will be pushed in front of you. Carla, thank you for your time and patience. Absolutely. Julian, understand. Thank you. Wasim, man, those Telegram trades are insane for real. Yeah, you know, one thing I wanted to point out as well is when you guys see the analysis, the content that we're sharing, I'm not a content creator. We're traders. You know, me, my associates, we're trading every day. We're not just here making content, making flashy PDFs to look good. What you guys see in those contents, that's what I'm seeing in price real time. That's what my team, that's what we're seeing in price action. And we're just putting it on a chart so you can visualize what's going through our mind. But again, before content creators, we're traders. I'm not like the other guys on Twitter that are just there making flashy PDFs to sell mentorship. I'm actually trading. I'm actually using these concepts live, real time, daily. And again, that's what separates me from the chaff. So low-hanging fruit on counter trend trades, yes. You have to adjust your trading protocol for when you're trading pro trend or counter trend. Olawale baking at 400 degrees. Yes, sir. I will open up private training in January, yes. Luke, but pro trend is higher time frame. Yeah, we're weekly, monthly, daily. That's higher time frame. Institutional inflows, capital inflows in this market are coming in through those time frames. The banks, institutions, hedge funds, fund managers, they're trading on those higher time frames. So you have to understand what those are doing. And then once you understand where those higher time frames are going, you'll be much more successful in your in your trading endeavors. Appreciate that, Momentum Trader. Absolutely. Yes. All these videos will be recorded and will be available. Absolutely. Thank you. So all the details for mentorship, again, appreciate your guys' enthusiasm. All those details will be out shortly. I'm finalizing the final details with the legal team, with the web developer, and we should have that by this week, I'm hoping. So that's what we're looking at. So that, again, I want to give you guys ample time to prepare for private training that I'm going to be opening. Mahmood, brother, please stop spamming the chat about the measuring gap, my man. I already covered it. The recording will be up. I've covered it in several other recordings, called them live, so you have all that at your disposal. So I already shared that. Again, the recording will be uploaded. Please don't spam the chat. Silk Touch Trading, insane. This is free. I just can't believe it. Appreciate that. Appreciate that. Yeah, you got to deliver value. I've been on YouTube doing this for free for over a year now. And again, you guys know I'm a trader before a content creator, and just showing you what's at your disposal with these concepts, what you have available to you, and that's all I'm doing here. Calling these markets for you guys live, putting myself out there. No plan A, plan B, and if I'm wrong, I'm wrong. But obviously, you guys see the results; they speak for themselves. Michael Miller, welcome to the Adora community. Thank you for your support, Michael. Really appreciate that, my man. Yes, I discovered it only a month ago, and my God, how I've improved my finesse in the markets. Definitely, got to finesse it. It's all about the finesse, for sure. Denisha, thanks for coming on today and sharing your time. Show some love and hit the like button before you leave. Thank you very much, Denisha. Thank you. Been on ICT for over a year, not missing a session, but this is a new level. Appreciate that, Silk. Excuse the trading partner. So, Shane dropping gold here. Hit that like button. Thank you. Jay, do you use bots in your trading? No bots. Everything's discretionary that I'm doing. I'm doing all discretionary trading. I wouldn't trust a bot. I am the bot. Once you start mentorship, will you be trading online more often? So in mentorship, I will be working with you guys over live price action. We'll be, sharing my opinion daily, doing these things in front of the markets because, again, you don't learn in hindsight. Initially, you have to see things in hindsight. You have to be taught them in previous data, but you only learn it after that through application. So I would be teaching you all these concepts over live price action for an entire calendar year, which is what it takes to learn this properly. Colin, on average, how many hours per day do you spend in front of the screens? So typically, I refine my trading to 90 minutes. I usually get on a little bit before that, so I'm on no more than 2-3 hours at most. If I really want to push it a lot, I'll work through both sessions, but that can be draining. It can be draining working through both sessions, and more is not more in trading. Less is a lot more in trading. You want to refine your focus, refine your mental capital, and in my opinion, 90 minutes is ideal. Get on for either AM or PM session, whatever fits your schedule, and less time in front of the charts is more, for sure. It's easy to think the opposite when you first start, thinking you have to trade the London session, the New York morning session in the afternoon. But again, that's so counterproductive to successful trading. So less is a lot more in this business, especially once you know what you're doing. Like in my case, when you're managing a good amount of capital, you just want to take quality over quantity. You're not trying to force every setup. Can I see these micro movements like this down close candle up to the swing high? Yes, I can see those micro movements and I can scalp it all day long. But, when you're trading size, when you're, putting on a good amount of contracts, again, I'm not trying to catch all these Mickey Mouse moves in here. I want clean price legs that deliver, pay me my money, get done. Not looking to overstay my welcome. I want to get in, get paid, get out. So hopefully that covers your question, Colin. And right now, guys, the market's not doing anything. We're just seeing a retracement. So what I'm monitoring is how we trade inside this 15-minute fair value gap and this 5-minute fair value gap in here. So perfect lesson as to why we don't shorten a discount. If I would have chased here or here, I would be stopped out now. So that's why, even though I can see where it's running to, the rules, again, are there for a reason. So what I'd be monitoring is how we trade inside this 5-minute inefficiency and this 15-minute fair value gap in here. So that's what I'm going to be watching right now and see how we trade there. And then that insight will give me more clarity going into the rest of the session. There's still another hour and a half of trading. So just relax. Let it come to you. Let it come to you. J Rich, Synth, ICT, no accounts blown, and my drawdown doesn't exceed 1%. This is huge for me. That's awesome, Jay. Really happy to hear that, man. You know, when you finally realize that trading is just in between your ears, it changes the entire outlook in your career for sure, Jay. That's awesome to hear, brother. Luke, do you only focus on 15 and 5-minute fair value gaps? I look at fair value gaps on all time frames, from the weekly all the way down to 1 minute. Or I mean monthly all the way down to 1 minute, actually. Momentum Trader, welcome to Plus Adora. Appreciate the support, my man. Thank you, sir. All right, so let me see. So now we're going into a specific time where setups like the form. So I knew it was just going to be chop here. And then now we're going to get into the movement. So that's why I was answering some questions, but time to lock back in now. Again, why we don't short in discounts. Luke, I mean, in these situations, are 5 and 15 more important than the 1 minute? Yeah, brother, that's just basic top-down analysis, my man. You have to know the weekly is going to be more important than the daily. The daily is going to be more important than the hourly. 15, 5, 1 seconds, and so on. You have to understand that that's just basic top-down analysis, and that's what I share every Sunday. So every Sunday, that's what I'm sharing, how to do proper top-down analysis free of charge. And we're slaughtering even the paid services that many people pay for in terms of outlooks and analysis. My free YouTube analysis dwarfs what most paid subscriptions are given. So this 5-minute inefficiency here, I'm seeing that we closed above it. Did we? Yeah, so we closed above that on the 5-minute. So if we now use that as support, then that would tell me we're likely going to continue higher. And then I would look for a fair value gap long entry. Let's see, NASDAQ. So if we create a fair value gap and drop down into it, I will be looking to take a long entry. So I'd want to see this inversion here act as support. And again, that's why you have to be surgical if you're trading counter trend. Because again, if I were to hold on to that too long, if I didn't take partials at 5 handles, if I didn't move my stop loss down into profit, I'd be getting smoked right now. So again, there's so many levels to this. And again, this is barely scratching the surface. But again, it's a good start. It's a good start. Dollar still dropping, giving me confidence that this market will continue going lower. And again, if it runs off without me, it sucks, but it is what it is. So I want it to come down into that fair value gap, fill me, and that's where I'll be looking to get my entry. And now I see why ICT has the chat off, man. It's a lot. It's a lot coming at me while I'm reading all this price. Again, I want to attend all your questions, but when I'm locked in, I'm locked in. So I'll touch on those after, if I'm able to, after the session. So put the stop down here. Well, you know what? I'll keep it below the 5-minute level. Yeah, we'll just put it right there. About a 5-handle stop. So, okay, we created a new fair value gap. So now I'm going to put it there at that level. And then what I would be looking for in terms of here, let me adjust the stop. So it's within the risk parameters. So stop is within the risk parameters. First target would be this high here. We should smoke that high, run through it aggressively, and then that would tell me we're likely going to be making new highs on the day. So that's what I'm looking for. But I would like it to tag that fair value gap and tag me in. And again, if it misses my entry, that would be unfortunate, but is what it is. So looking at the hourly chart, so you always want to know where that hourly candle is going. It's something I teach a lot. You can use the hourly candle and trade it like a daily chart. So we opened, manipulated lower. So what we traded was the manipulation on the 1-hour candle. Yes, you can trade the Judas swing. You can trade the real run. I showed you guys an example of selling and buying in the same day. But again, that's something that's not easy to do. You definitely, early on, you just want to focus on trading pro trend. But, you know, I'm showing that there's lots of levels to this and lots of levels of precision. So again, we open, trade lower, run the stops, and now we're aggressively expanding higher. So what I'm expecting for this 1-hour candle is an expansion higher. So just like a daily chart, if it's expanding higher, do we want to be focused on going long or going short? Going long. So again, when I was getting asked when we're down here, well, why don't you just take that as a short? Why don't you just get short here if there's still room to the targets? I'm trading counter to my analysis. So I can't short discounts. I have to short the premium, be surgical, be nimble, because again, if not, the market will punish you. So we have a new 5-minute candle open up. So I'd want to see this run lower, create like a Judas swing for this candle, like a wick, and then run higher. But again, we have a volume imbalance and a bullish order block in there, so it may not come down to that level. So what I'll go ahead and do in a instance like this is if it tags that volume imbalance, I will look to go in at market. So on the touch of that volume imbalance, I'm buying one. So no matter what, I got a contract in there. If it comes lower and fills these two, even better. That's what I want. But even though it may not do that, I'm in with one contract. As soon as you see that candle open and it traded down into that volume imbalance, just that repeating phenomena of hitting that inefficiency, I can buy that right there and be a buyer there. So again, still not chasing because I bought when the market was trading down inside of a down close candle bullish order block. So I want this entry to get filled. Truthfully, I want it to come down into here, fill this entry. But if it does not do that, at least I have something in the marketplace. So let me go ahead and put the stop order. So we'll put that stop right here. Perfect. Momentum trader manifesting gains for Dylan. Appreciate that, my man. I appreciate it. So we traded higher, and again, it may not want to come down to that entry. Why? Because again, we have a volume imbalance and a down close candle and a breaker here. So looking at this breaker from here to here, you see how it's hitting that as support. So that's why I wanted to get my entry as it's tagging that, because again, it may not come down to this ideal entry. So because this is now pro trend, man, I'm giving you guys all the sauce today. I'll go in with up to 3-4 contracts on my entry. But you guys saw when I was shorting, I just want to be very conservative. I want to go in with 2 contracts and limit the risk exposure. But because now I'm trading with that weekly chart, we see that expansion higher that, again, we expected since when? Sunday. I'm trading with that daily expansion higher, and I'm trading with the hourly expansion higher. I want to put a lot more gunpowder behind this setup than I do a short setup. So yeah, this thing may not even come and hit these other 2 limit orders. That'd be unfortunate, but it is what it is. Jay Rich, so glad I found this channel. Real analysis, live executions. Awesome. Thanks, my man. Zeta, what time frame do you mainly use to trade? I use all of them. But I'm mainly taking my entries on the 1 minute chart. Darren, I have to go, man. Your analysis is good every week, but I cannot deal with the cockiness. Oh, that's unfortunate, Darren. Don't let the door hit you on your ass on the way out. So breaker, again, discussing why that should be support. We hit the high end of that, and then also bullish order block that I qualified to you guys there real time, extending that opening price through. So we'll go ahead and label that. Bullish order block. So that opening price there, that's also aligned with that bullish breaker. So remember I discussed the concept of nested PD arrays, and we hit the high end of that bullish order block, hit that, and now we're rallying. So that's why we're seeing that very specific turning point there. And again, let me go ahead and clean up the chart here. This is, I had this rectangle on here to take your attention to this inefficiency. As soon as we closed above it here on that 5 minute chart, go ahead and make this big. So as soon as we closed above here, this fair value gap, what does that tell me? This market's bullish. And that's when I'm hunting my long entries because of these signatures there. So I'm going to go and take that off again, clean up the chart. I'm just putting these things on there so that you guys can refer to it. And then we have that breaker, but I'm going to take this off. But you want to be paying attention to those levels. I would have liked to have seen the market come down, tag this inversion. That would have been a nice entry there, but unfortunately, it just didn't give it. Tómase una cervecita y relájase. El que se fue. Sí, Nabil, él necesita eso, ya tú sabes, ya tú sabes. What determines when you place long positions or short positions? Well, I need to know where the market's going, and then I have several models that can get me into a trade. Again, I use the volume imbalance. I would have liked to have taken this fair value gap long as a silver bullet trade, but because it didn't tag it, I'm able to use the volume imbalance and order block as an entry. So I'm still buying within a discount array. And as long as we still have 10 handles arranged to the drawn liquidity or where I think we're going, I have several entry models that get me in. Originally, I just had one entry model. When I first started, it was just 2022 model. But over time, with experience, I developed several models that allow me to get into trades. So that's why I never have a fear of missing a move, because I know that I have several models that'll always get me into more setups. So I'm going to go ahead and take this limit order off because it's probably not going to tag that. Then I'll just go ahead and put one stop. Matthew, Dylan just got out of class. Happy to finally hop on here. Glad to have you. Nino, United States, from the United States. Mother's side of the family is from Panama, though. So half Panamanian as well. But yes, I am from Florida. Islam, in your training, are you going to start from 0 to 100? Or just will teach some content based on your experience? Yeah, it's going to be from beginner to advanced. It's going to cover everything. It's going to be all inclusive for sure. And obviously my experience is going to be sprinkled in as we go through live sessions, as I take you guys through live tape reading, all that good stuff. So let me put this on this time frame. So this buy side here was the first target, as I said, just the intraday high. But I want to see us again displace through that, because if we do so, I suspect we're going to want to run for these highs here. So that's what I'm going to be looking for. So what I prefer to see, looking at this 5-minute chart, I would like to see the market trade down into this 5-minute fair value gap. And then if I get that entry right there, I would look to buy that again with another additional position. Daniel, what was the most challenging thing you had to learn when it comes to trading? For me, it's controlling emotions. That's a really good question. Really, I think that's what it is for everybody, because this is very hard. It's really tough to, manage money, to be disciplined about it. When money's taken from you, you have to be disciplined to stop, to pump the brakes, come back, follow the rules. There's just a lot of things to it, but following rules and sticking to it is the way you overcome that. And you just got to be disciplined about it for sure. So we just got this new 5-minute candle opening here. I would like to see the market trade into this fair value gap, but it's very unlikely to do so, unfortunately. So I'm going to go ahead and adjust my stop below here. Man, I really wanted to get on a bigger position here, but let me see how much range we have. All right, so there's still a good amount of range to look to get an entry off of. So let me drop down into the 30-second. Nino, Spanish sounds good. Appreciate that. Jimmy, YM looks janky. Yeah, exactly. That's why I personally don't prefer to trade Dow. So if we get a touch of that 30-second inefficiency, I would look to buy another contract there. Awesome. All right, so let me adjust the stop loss. Sell stop. All right. So here's what I'm looking at. We'll go up to the 5-minute chart. Again, we don't just look at the 1 minute. We have to consider several factors. So we have a bullish breaker in here. So because we have low, lower, low, this highest up close is a bullish breaker. So this is going to be a breakaway gap. I don't even want to see this one traded to. So that's why I'm confidently entering here. And it's not a premium. Well, maybe just looking at the dealing range we're in, it's a premium. But because on that hourly chart, remember those inefficiencies I shared with you guys if we were going higher? I'll go to the 4-hour. Share that with you guys. All right, I wish those executions weren't showing, but whatever. So this inefficiency here, I told you guys that would be a draw if we traded to the upside. So I shared what we would be seeing on the downside. for shorts, which was just running out the liquidity pool here and this equal low here. It didn't even need to get there for the trader to be paid. Again, I didn't even get in the trade, but obviously trader would have been paid there. And then I would be reversing that analysis going long. So again, we can trade the Judas swing going lower, and then we can trade the true move going higher. So I want my stop to be 5 handles. So 5 handles would be right here. Perfect. So looking at the 15-minute inefficiency here, this trade lower, higher, that's a balanced price range. So we don't even need to trade down into this inefficiency here. So looking at the 15-minute chart, I'm not looking at this like we're going to trade all the way down to this inefficiency, because I prefer to see us not even do so, because it's a balanced price range, so it doesn't need to. Looking at the 5-minute, it can punch down into this one here, which is why my stop has to incorporate that inefficient delivery there. But it's also below the breaker. So this up close, these consecutive up close, that's order block theory. So you use the consecutive up close candles. We can trade into this fair value gap, use it as support, but we should not get below this one right here. But again, I have rules, I have a protocol, so a stop loss doesn't mean anything to me in the long run. So one execution, one trade, again, is not a career. So we have this inefficiency here. For those of you guys that have been with me, high probability order block. You guys know why. So I want to see the market find support here and blast off. How do I have it on ticks, Gene? I'm not sure. Let me settings. Ah, here it is. So you can put it on to show the money. We have here. You can put it on to show the ticks. Man. So here's another thing I'm going to cover as well. So why am I in this trade? Why am I holding for external range of liquidity? This would be considered external. Here was just internal. So if we go all the way up to the 15-minute chart, put that on the big one. Why wouldn't I hold that short for like external range of liquidity down here, for example? Because the market is bullish on those higher time frames top down. So what I'm doing is I'm just very surgical on the shorts and taking partials at internal range liquidity. But because I'm bullish, because that daily chart, that hourly, that weekly chart is expanding higher, I trust that we're going to expand into internal range liquidity. So it's not just as simple as external, internal. You have to know why it should go for internal, why it should go for external. And that's how you begin to draw up a narrative. So this drop here was to do what? Absorb that liquidity. Who bought that? Smart money. And then once we displaced higher, got that confirmation, we're going long, attacking the buy side. So now the orders that are above here, that's what's in the crosshairs. Man, Nasdaq's running nicely. Man, I wish I should have got an NQ, but because I was already logged into the broker on my ES chart, I just went in through ES. So looking at this daily fair value gap, again, I told you guys to keep in mind the you are still screen sharing. Not sure what you mean there. So looking at this level here, we have that daily fair value gap. Remember I told you guys you have to understand those higher time frame PD arrays top down. So this is that daily inefficiency here in blue. So the fact that we close above this here, the consequent encroachment, the midpoint, that gives me confidence to know we're still bullish and we're still going higher. And again, calling all these turning points, telling you guys this is a high probability order block. Because again, there's levels to it. There's things you have to understand as to what makes that a high probability order block. What qualifies that as a high probability order block to trade? Again, there's different things you have to know and consider. So we trade into that fair value gap, into the high probability order block. And that's actually, yeah, that's what I based off my entry. Looking at can I share the executions? How does that work? Yeah. So as we're trading down into this inefficiency here on a 30-second and this order block here, I'm doing more buying. But from where we're at here already, that's too rich of a premium for me to want to buy that market. So here I have an inefficiency order block here. I wouldn't want to see us get below that. So let me go ahead and start placing my limit orders. So 41.12. Oh man, I should have already had it TP. Damn. Man, talking or teaching and trading at the same time, not as easy as I'm making it look here. I'm supposed to have my limit order to get tagged, but that's fine. We'll just put it above that high. Trade settings. Let me take off. Hold on. Orders. Okay, there it is. All right. Oh, that's the one I'll take off. Okay, sweet. So limit order here just above this this buy side liquidity pool here. Modify order. Like I said, these highs right here, that's just going to be in the crosshairs. People always trying to call a top in a market that's going higher. So they give them that retracement lower. And then what does that do? That builds in more orders here. So I suspect the market's going to want to trade higher and run through these orders in here. And again, qualifying on a 1-minute chart, all the signatures we want to see. Calling the turning point from this order block, from this breaker, from this fair value gap, from this order block, and now we want to see the market rally from this fair value gap in here. And then I want to see it aggressively expand through this high here and run in and reach for that limit order. Olawale, doing great. We appreciate it. Thank you, my man. Glad it's helping you guys. Christopher, you're doing great, man. Golden session. Thank you very much, sir. Man, finally someone asked. I was wondering when you guys were going to ask when it was going to be, why it's a high probability order block. So it's one, because the narrative is bullish. So again, you have to know where the market's reaching for. So we're bullish. 2 down close candles. As soon as we trade through that opening price, that's the change in state of delivery. So we have a fair value gap, a shift in market structure, and we're bullish. So all those factors come together to make it a high probability order block. There's a lot of things you have to consider for order block theory. And if you study from ICT himself, you'll eventually get to that conclusion after combing through his content for hours. So again, I want to see an aggressive expansion through this high here. I want to see that cleaned out expediently. Again, wish I would have been able to put on that third contract down here and build it up to 3, because then what I would have done was 3, 2, 1, and then I would have built it up to 6 contracts for this run higher, but the market structure did not permit. So gonna have to roll with 2. So I want to see it run with speed now to this high, because we're also in a macro window. So you got to look at the timing aspects. So I want to see the market aggressively run through this 45.19 level. Why not the other high? That's a good question, Mohammed. That is where I'm going to be taking my next partial. Great question. But because from my initial entry down here, this one pays 7.5 handles. So that's a really good first take profit. Usually I would do 5 and just pay the trader something at 5. That's 250. So that would pay me for my time. And then I would let the other one run and then look to turn it like a $750,000 trade. But because again, I'm trading pro trend, because I can see where we're likely reaching for, I'll just hold for this target here. And now the stop can be adjusted. So again, managing the stop real time, and I'm going to just keep it right here. So now my risk is only 2 points. And again, managing a stop real time, doing all these things here for you guys. This fair value gap, trade into it. I said we'd want to see what? Support, market does it. So now again, I want to see an aggressive run for this high here and look to tag this buy side liquidity pool. So again, we're getting into the 3 o'clock hour. So I would want to see big blue up candles right now. So within the next 3 candles, I suspect we'll be above this high here. So getting above that new week opening gap using a support, a nice bullish signature we want to see. And again, now I expect us to run for that high there on that 15-minute chart right here. And again, on the 5-minute chart, qualifying to you guys real time, why we don't even want to see this one fill in. So again, I know you guys want to learn about breakaway gaps, and I wish it's something that I could just teach in 5 minutes, but there's a lot of things you have to know and understand to qualify breakaway gaps, measuring gaps. And again, it's just something that comes with experience. Just like anything else that's worth doing, lawyer, doctor, engineer, whatever, you're going to be studying for some time. And this is no different. And the nice thing about this is there's no limit. There's no cap. You write your own checks. How much do you want to make? I don't know. How much you want to trade? So again, I want to see big green candles now running for this high, or not green. So I used to study in ICT charts, but I want to see big blue candles now running for this high. That's a good question on the stop placement, Olawale. I just keep my stop comfortable. It's not something I'm in a hurry to like rush up here, here, here. If I really wanted to, I could put a stop right here. But I'm not worried about the stop. I'm more concerned about my limit orders getting hit than I am my stop loss. So I want it way out of striking distance. I don't want my stop loss to be suffocating my trade. I don't want to even consider it. I want to concern myself with my limit orders getting hit, and the stop loss placement is going to be secondary to that. So once this high is toasted, I'll go ahead and share with you guys something else I wanna teach. Jism, Dylan, are you the algorithm itself? That's hilarious. Nope, just happened to know it very, very well, very intimately. All right, so we opened up with the volume imbalance here. They can trade into that, but what I'd want to see is like it hit it and then run up like and blast off for the high. Okay, so dollar's still running lower. So I'm going to touch on dollar here momentarily. So remember I showed you guys that daily fair value gap on dollar. The fact that we keep running down to it tells me what? I can confidently keep being a buyer of the E-mini S&P, but you have to know the daily chart. So I took our attention to this inefficiency here. So now we drop down into the lower time frames, 5 minute, 1 minute. What's the market doing? It's running lower. So that's what allows me to trust being a buyer in stock indices. So you have to factor in intermarket relationship as well. Intermarket relationships, excuse me. And it would have really been nice to tag that limit and be in with 3 and then been able to pyramid. But unfortunately, I could just get in with 1 and then 1 more because the market structure didn't permit it to trade lower. But it's all good. Win's a win. All right, come on, bring it on home, S&P. Bring it on home. All right, there we go. Limit order has been tagged. So let me go ahead and adjust the stop. So stop goes to break even, risk-free trade, and trader has been paid. Lovely. All right, so hourly chart, now that I can go on with what I wanted to, I just wanted to smack that limit order first. So looking at that 1 hour chart. So when it opened, manipulated, and we began the expansion, remember I took our attention to this hourly candle. I said if we're expecting a bullish expansion on the weekly, daily, hourly chart, I wouldn't be trading in line with that expansion. So again, we traded the manipulation. Well, I didn't trade it. I would have liked to have traded the manipulation into the stops. So that was a sell to buy. Why? Because we're bullish. It's going to manipulate lower, run those stops. We rejected it strongly. Got the long entry in here, but we're trading that expansion of that hourly candle. So we're bullish here on this 1 hour candle for the 3 o'clock open. So we open, we manipulated lower. How low can it go? Consequent encroachment of that daily fair value gap. So I'm studying these signatures. We hit that midpoint, and then we see what? Rally higher. Perfect. That tells me your trade's still valid. Stay with it. So if we drop down to our 1 minute chart, again, the stop is basically at slightly above break even. And again, as I said, it is a risk-free trade now. So letting the market run. I don't have a fixed point on how much I want to take profit on this next contract. We have this buy side here, but if this thing's going to run for me, if you catch a tiger by the tail, let it run. So what I'm going to see is how we trade above this high. So if we start displacing through it, giving me signatures I want to see, I'll hold it. But if we trade it and reject it, then that would be a problematic signature, and then I would likely have to just close out manually. Mars, bro, you are not cocky. You are too good. One of the best ICT students. Thank you for your time. Learned a lot. Thanks, Mars. I appreciate it. Yeah, I don't consider myself to be a cocky person, but I guess everyone has their opinion, right? And it's the internet, so everyone's a big internet tough guy. You know how it is. So this high here at 45.20, I want to see that high smoked, and I want to see us aggressively displace through it, not just hit it and pull back into the range. I want to see aggressive expansion above that high, because then my attention is going to go to, let's go to the 4-hour chart. So we have this inefficient delivery here. So let's extend that 4-hour inefficiency too. Remember that I took our attention to before we even started trading this session. And then I would look for the market to trade up into here. That's still another good 10 points, 15 points higher. So it can do it, but again, it depends on how we trade above this high. We shouldn't just hit it and reject. We should aggressively displace through it. And then to your point, Olawale, I wanted to share something there, my man. Yes, this consolidation here, what that's doing is that's building in more orders here and here. Because retail wants to see what? Look, it hit the market. Look, it hit it. It dropped. It hit it again. Look, it's about to drop. So they're selling short there. And we're looking for the market to careen into their orders. And that's where I'm distributing to these willing buyers at an expensive price. So I'm buying here, distributing it higher. Simple. We buy the discount, we sell the premium. Then I'll go ahead and raise the stop here, lock in some more profit. All right, guys, hold on. I do have to take this call real quick. All right, so I like how we traded through that high there with the fair value gap. That tells me this market is bullish and it's going to want to continue reaching higher. Oh, hold on. Hey, Tommy Abraham, you guys get in on the action? Gotta make sure the associates are banking. Awesome. Awesome. All right. Whole squad eating today. Whole squad eating today. Sweet. One. Awesome. Yeah. Yeah. Leave that runner. Leave that runner for sure. Brian Kim made 3K with you. Lovely. Momentum trader. Dylan calling the market makers, telling them to rip it higher. Pump it. Nice, Tommy. Good work, brother. Good work, Abraham. Bagged and tagged. Yes, sir, Tommy. Love to hear it, man. Yeah, and if you took all your position off above that external range liquidity, that's a lovely trade, brother. So great work there. Great work there. High-speed trading, confident, not cocky, exactly, for sure. Just confidence. But people that tend to be insecure, they don't like to see people that are confident. Intimidates them. Joe, on point, Dylan. Thank you, brother. Christopher, some people mistake confident to being cocky. Yeah, for sure, for sure. Noah, so glad I found your content. You do a great job reading the tape. Thank you. Jonathan telling the banks what to do next. Man, you guys are funny. All right, so the market is still running here. Again, I needed to see how we traded above that high. And again, these signatures are bullish. So if you look at this here, we'll go ahead and make this big so we can see the detail. So this high here, look at how we traded through it. So the fact that we trade through this with an inefficiency, that's when I'll expect classic support and resistance to work. That's when that's going to work as a buy. So classic support and resistance only works if these elements are in it. So yes, you can just look at that as low. Buy the high. Look, old resistance is going to turn support, but only because there's a fair value gap there. So like I said, even retail stuff can work if it has this logic within it. And again, it has to be reaching for something. And then we covered this 4-hour fair value gap up here. So I would look to be all closed out here at this new week opening gap. Just looking at the event horizon from this low to this high here, that puts at the 31.75. So I'm going to have a limit order there at 31 just to close out. And again, not look to overstay my welcome. But again, because we trade through that high with an inefficiency, use it as support, rally, that one tells me we're still bullish. But two, it tells me that I can trust that as real support and resistance. And then again, back to that 15-minute chart, sharing why we didn't even need to come back here, why I didn't expect that, because it's a balanced price range. Boom. How much studying did you do to understand with this much accuracy? Insane study. Insane study. Smashed new NASDAQ high. That is done with all your help. Awesome, Ahmed. Glad I was able to help you, brother. High-speed trading company. It was nice to watch you after missing the first trade, then stick around for the next trade. I would have bailed after the first one. Yeah, that's something that, again, just comes with confidence as well. You know, once you know what you're looking for, you can wait around for different opportunities. Again, missed the trade here, but again, not going to get flustered, not going to get all excited. I'm just going to wait for the next opportunity to present itself. I'm not going to like chase it low or anything. I'm just going to let that next opportunity lay itself in my lap. And that's all we're doing. A to the D, the man in action. I respect your knowledge and method a lot. Appreciate that. Thank you, sir. Adolfo, the level of this stream was unreal. Learning a lot. Thank you so much. Thank you. Thanks for joining. Thund up Tamang, next ICT junior in the space. That's funny. Now I'm my own person. ICT gets the credit for sure, but we're doing our own thing here. 315 macro, definitely. Now that we're in that 315 window, I do expect to see a lot more animation and price delivery. So again, understanding that hourly candle, I told you guys it was going to do what? Expand higher. So that's why I'm trusting holding the trade, because I can see that this candle is likely going to want to expand here. Even if it doesn't get to it though, just understanding that that's the direction I want to be trading in, that's going to be enough for me to pay the trader. High-speed trading company, what advice would you give for those of us that wish to trade the remainder of the year? Be nimble, know what you're looking for, be surgical, get paid, and get out. The only reason I'm not trading a lot is because, again, I'm going to be resting mentally. It may not look like it, but trading is highly stressful. It's not stressful in the sense that I'm excited about each trade, but in the sense that, you're here, risking money. Bombs could go off on the other side of the world and throw these markets, into crazy movements. So just always that underlying risk. You want to be able to unplug from it. So because I'm going into signals, because I'm going into private training next year, I'm going to unplug, spend time with my family, do things outside the charts, prepare for all those things. And that's why I'm personally doing it. Can I still go in here and find setups daily? Absolutely. Because even with very small ranges, there's still trades, there's still opportunities. So all that to say, yes, you can still trade it. It's still absolutely tradable, but the ranges may shrink, and we may see smaller ranges because it's going to reflect that holiday volume. Hedge funds, institutions, money managers, a lot of them are unloading their balance sheets going into the holidays. So that's why we see a lot of volume around this time, because again, they're offloading, they're making their transactions, and why it'll start to kind of peter off going into Thanksgiving, and then especially going into that after the second week, going into the third week of December. So that's why I'm just taking it off. I said I may come back, do a little bit for the first 2 weeks of December if I see something, but again, the reason I do this is not to trade every day. It's to have that freedom to not have to be doing this every day. But hopefully that covers your question. High-speed trading. Brian Kim, all right, took my runner bags, 3,350 out for the day. Lovely. Lovely. Confidence, patience, and composure are the key makings of a successful teacher. Thank you very much, May. Much appreciated. Eduardo's great teaching, learning more and more every time and every stream. Awesome. Glad it's helpful, Eduardo's. Thank you. All right. So this is the new week opening gap I'm referring to in here. So the new week opening gap from, man, I can never remember. Is it the month first? Yeah. So July 2nd, new week opening gap. That's the one I'm going to be targeting. So that inefficiency is just a low-hanging fruit target. Looking at NASDAQ, man, NASDAQ's really running. It would have really been nice to have taken the NASDAQ. NASDAQ's really a tiger by the tail. Looking at NASDAQ, just how nice it's running. Getting those entries there, we would have already been bagged like 40 points in the NQ. But got it on the ES because this is the one I was logged into my broker on, so I didn't feel like doing all that switch up live here and showing all my like credentials and stuff. So we went with the ES. But again, it was still enough to get paid, so that's the most important thing. Tato, great question. Any tips to overcome anxiety on the charts? Yes, it can be highly anxiety inducing, especially early on, but that's why you have to start with the least. Again, everyone makes the mistake of coming in and trying to do hold on. Oh, upper chart is being covered. Oh, thanks for letting me know. Thanks, man. Okay, so that should be better. So yeah, tips for overcoming anxiety. One, have a plan. No, you got to know what you're doing. You got to have a model. You got to know what you're looking. If you're just in here trying to cowboy it, that's going to be extremely anxiety inducing because you don't have a plan. But as far as the anxiety itself, you want to start with the least. Again, the mistake everybody makes is coming in here and trying to make way too much money before you really know what you're doing. Money's a result of doing the right things over time. So once you start doing the right things over time, money's going to come in. But if you just come into this business looking to, okay, how can I make a lot of money? How can I hit home runs every day? That's why a lot of people are getting wrecked because you're trying to risk too much, do way too much that you don't even have the experience to navigate. And I'm not saying in your specific situation, Tato, but I'm just saying in general, that's a common mistake people make. So how do you alleviate that? How do you help with anxiety, with being anxious on the charts? You have to do the least. Start with a micro contract. Trade $5 a point on the ES. Get comfortable, get bored. This should be very boring. Again, you guys see with my trading, I'm not excited. I'm not hopped up. It's just very calm, cool, collected. And that's how you want your trading to be, because it's not going to be as anxiety inducing if you approach it with a professional mindset and you know what you're doing. But starting with the least is a good way to help that. So start trading with micros, trade with very few contracts. And then over time, you can start 2 micros, start 3 micros, 4, and then just build up over time. And then that's how you'll eventually ease the nerves when you're in front of the charts. Yeah, Gene, for sure. If you're anxious on the charts, the risk is too much per trade. Think about the next 100 trades. Absolutely. Appreciate the sound advice, Gene. So I want to see this thing peel off here. So we have a 5-minute. Again, just nothing but up close candles. And again, this is the type of trading I like to do, where the market's just careening higher. Why is it trading like this? Because we're in line with that institutional order flow top down. So looking at the run higher today, just a nice run higher. Look at the drops. It's high resistance dropping. Whereas when we're trading higher, it's a much cleaner delivery because the institutional order flow is bullish top down. So as long as you're trading in line with that institutional order flow, you'll be able to get trades like this. There is not a single down close candle since we bought or since we called the turning point to these highs. And that's the type of trading we want to be doing, where it's clean, it's one-sided, it's obvious, and it's low resistance. So what I'd want to see is the market supported inside this fair value gap in here. Again, my stop loss is well out of striking distance. I'm not concerned about it because I'm more concerned with my limit orders getting hit here in a premium. But again, we can trade down into this 5-minute fair value gap. Even as far as this one, but I prefer to see a stay in this one, leave this one open, and then that would tell me we're really bullish into the remaining portion of the session. AB, another awesome session. Thanks, Dylan. Yeah, glad to help, AB. Thanks for joining us, brother. Paul, can you please suggest anything to avoid over trading and be patient? Yeah, you got to have rules. So I would limit yourself to 2 trades a day or 1 trade a day if it's, bad with over trading. Because if you just limit yourself to 1 trade, 2 trades, you're never going to overtrade and you're going to find out a lot about yourself. You got to have the discipline if you want to cut it in this business. And doing that, following your rules over weeks, over months, is going to forge that discipline that you need to be able to cut it in a ruthless. It's a cutthroat industry. It's not easy. It's very tough, and those are definitely ways that will help you alleviate those pressures. So again, slight retracement. It's natural. I'm looking at the 15 and the 5-minute chart. Nothing's changed my outlook. Nothing has changed. Again, stop loss is a break even, well out of striking distance, and I allow the market to breathe. I'm not going to choke my stop loss right by market price because again, that's not what I like to do. I'm more focused on my limit orders getting hit here in a premium. Let me go ahead. And again, what would have really been nice was to have gotten on a few more contracts because then I would have really been able to take 2 to 3 off above this high and then just let the last 2 or 1, however much it would have been, run. That would have been the ideal scenario for today, but. So this inefficiency here on that 1 minute can be traded into, but I do want to see support from this level here. So I prefer to even see the body stay above that midpoint there. All right, guys, I'm going to be taking a restroom break. I'll be right back. So is the S&P behaving or what? So yeah, like I said, want to see us stay above this. Let me actually put that on the correct level. The inefficiency we have here. Remember I said we want to see the bodies stay above that. So that's a signature that I like to see. And again, that tells me we're still bullish. So again, retracements are okay. Took our attention to the 5-minute chart. Said that it's permissible to trade down into this inefficiency on a 5-minute chart. But then it should show me quickly that I'm on side and that the market is still bullish. And we're seeing that here. So Momentum Trader, the best moves happen during restroom breaks. Here we go, boys. Yeah, it feels like it, man. It feels like it. All right, so I got the limit order at 45.31.50. So once we hit that, I'm going to go ahead and close out. So we're in that last hour macro here from 3:15. Excuse me, 3:15 to 3:45. So we should start seeing speed within this window up to the targets that we're looking for. We still have dollar trending lower, again, as confirmation, because you can't just look at the asset you're trading. So what are we seeing dollar doing? It's still running right for that daily fair value gap that, again, we called live real time, why I should run into that level. So seeing that the dollar market is dropping, that tells me the markets are risk on. So money is going to be going into stock market. So again, not because of buying and selling pressure, but because of the aspect of intermarket relationship and capital inflows. Mosey, what's the main PM session model you trade? That is a great question. I was just asked that a few minutes ago, and you'll be able to refer back to the recording that'll be uploaded for all your edification. So like this fair value gap in here, for example, this is not a short. I meant to cover that before, but I had to use the restroom. But this is not a short. Why don't I look at that as, look, shift in market structure. We traded lower, fair value gap, sell short. That's not a short. Why? Because we're bullish top down. So the higher time frame order flow is going to be more significant. It's going to hold more weight than a entry pattern will. So again, the entry patterns are only effective once you understand what you're looking for top down. So this would not be 2022 resistance. It's going to be what? Support. Just to use classical terms. So it's an inversion fair value gap. I want to see the market get above it and then do what? Use it as support. So I want to see us stay above this now. And then I want to see speed through these highs here as well. Just like this high here. How you see we didn't just hit it. We ran through it. So I want to see that same idea occur here above this high. So I already covered the take profit as well, the new week opening gap. So I already covered that. And again, if you guys want to revisit this, I will make it available as a recording on the YouTube channel. So again, going back to that 5-minute chart, that retracement is permissible. But again, the market should show us what a willingness to rally. So I'm not looking at this like a balanced price range. We're going to hit it and reject. I mean, if we do that, then that would indicate something entirely different to me, and then I'll have to adjust with what the market's showing. But I'm not looking at it as we're going to hit this and sell off. I want to see us get above it. So now the stop would comfortably go below this low here. So no matter what, there's 5 handles. Yeah, 5 handles perfectly of profit locked in. So if it's a stop loss, so what? It's a nice stop loss in profit. If it runs to my limit order here, even better. Please stop spamming the chat, good sir. I have been trading for 4 years. So we have a down close, bullish order block here. So if we are going to remain bullish, let me take this level off here. I'd want to see us supported at this down close candle. If it runs for my stop, that's fine. I'm not going to get excited. I'm actually going to move the stop up. So if it does take me out, that's fine. Because if we're going to remain bullish on the remainder of the day, we're going to run from here. But because the days are already late in the day, we've already reached several higher time frame objectives. We've already made a new high on the day. There's a lot of factors that could indicate a retracement. So if we do see that, that's fine. I've already paid the trader above these highs here. Letting the market run if it does want to run for me. But if it stops me out, it's going to be in nice profit, and it'll be a nice profitable evening here. So putting this back on here. We should stay above this fair value gap. I wouldn't want to see us get below that. That would be too much of a, too deep of a retracement for my liking. So my stop is right below consequent encroachment of that wick, and it just took me out there. Lovely. So let me take off my limit order. Show you guys the business here. And again, it's likely we retrace because it was a one-sided day. Would I look to go short right now? Yeah, that would probably be a nice setup. But again, called out 2 really nice trades today. First one didn't fill me, but I don't need to push it. That's going to complete my day. Now I'm going to go hit the gym. So I'll show you guys the executions. I'm sure you guys want to see that. You guys want to see the business. So go ahead and share the executions here. Man, we'd be running circles around the Goldman Sachs boys that say this lower time frame just noise, and tell them bring their stuff here to a live stream. All right, so again, going long here, adding one more, covering here, stop out here. So rounding out an all right day. Again, wish I could have been able to pyramid 3, 2, 1 and built it up into 6 contracts. Really would have been able to do some nice damage, taking more profits above the highs, but because I only had 2, I had to trade what I had in front of me. So there's the execution right there. That's what we were looking at. Typically on the last hour of a one-sided day like we've seen, it'll create a nice back into the range setup. So like this inefficiency there could like be a nice short, just trading back into a short-term discount here. But again, nothing I'm going to trade, nothing I'm interested in. Once you secure the bag, you know, again, the goal is not to be trading all day. It's to go enjoy life. So with that, I think I'm going to look at a couple member questions if we have any, but that's going to do it here with the stream for today. Olawale, amazing PhD session. Dylan, thanks, brother. Glad it was helpful. All right, so taking the last few member questions. You being not sure if this was covered earlier, but is your view a higher time frame dollar has changed? Yeah, you being. I already covered earlier what we were looking for, but because it's a member question, I'll go into a little more detail. I mean, I like I said, I already touched on all these points, so I'm just gonna breeze over it. If you want to see it more in detail, you can go through the recording. So yeah, brother, remember what we shared? If you guys were taking notes on Sunday, I shared that my outlook was bullish based off what the price action was showing me. If we got through this gray rectangle here, let me take this one off. If we got through this gray rectangle, my attention went to the sell side here and here. And then refining that on the 4-hour chart, we had this bullish order block here, this down close candle. I said if we got through that, that was my invalidation for higher prices. And then I would take my attention to this low here and these equal lows. And then real time in the stream when we were trading here, I said the market would likely want to run for these lows in here. So covered that real time. And that's what we're seeing here in dollar. So hopefully that covered your question, Eubene. Momentum Trader, Dixie, curious about that too. Broke below monthly fair value gap. Yep. So for right now, I call the target here. We have these equal lows in here. So if we get animated through this, my intention would go to the sell side there. So that's what I would be looking for. But it depends on how we trade here. If we start accelerating through it, my attention goes here. If we start to find support, we saw a huge down day today. So we could look to reprice some of that inefficiency. Maddie, thank you so much. Yeah, thank you for joining us. Glad it was helpful. Joe, thanks. Dylan, Daniel, thank you. Russell, thank you. Glad you guys joined us. Golden as usual. Thanks. Cameron, thanks for today. Have a nice gym session. Yes, sir, will do. Julian, phenomenal understanding of the market. Always lots of learning. Yes, sir. Yes, sir. Lyndon Kosky, interesting how you read price. I know most terms, but seeing you trade them just makes me understand even more. Thank you for the session. Yeah, absolutely. So it's one thing to, know the terms, but you got to understand how to apply them, when to apply them, when not to apply them. And again, that's what makes this a little more nuanced. Again, it's not complex because once you know what you're looking for, it just becomes really simple. But you do, again, have to spend time with somebody that knows what they're doing, that can walk you through this consistently, day in, day out. I could do this every single day, every single session, and it's the same logic. Will I take stop losses? Absolutely. That's part of trading. But again, I don't care about the next trade. I care about the next 100 trades. So, learning. Thanks for the quick 200. Added to my profits for the day. Always amazing work from you. Now off to enjoy the rest of the day watching my daughter's cross-country meet. Awesome, man. That's why we do it, for the freedom. Enjoy the time with your daughters. How long did it take you to become consistently profitable? 1 year trading, 6 months with ICT. Frank, thank you. Dylan, yes, sir. Benjamin, thanks. I look forward to your mentorship. Awesome. Looking forward to having you. Michael Miller, thank you, Dylan. Most logical teacher on YouTube. Much appreciated. Matthew, drop the website, please. Yes, sir. We're working on it, my man. We're working on it. I appreciate your enthusiasm. All right, you guys, that's going to go ahead and do it for me. I believe that's all the member questions. If I did not get to some of the member questions, go ahead and send something to Telegram, so let me know you're a member. I'll go ahead and have myself or my associates get you squared away. So with that, hope you guys have a lovely rest of your day. Thank you for joining us, and that's going to do it for me. Good luck and good trading the rest of the week. Thank you.